So with that, we're going to kick off our second panel and quickly introduce the panelists. Okay, we've got Matthew Gerstenfeld. There he is, man of the hour. He's CEO and co-founder of Munichain, our sponsor today and our conference host. He previously worked at NASDAQ, Oppenheimer, JP Morgan Chase, and IHS Markit S&P Global. He has expertise in underwriting, sales, trading, advisory, market risk, technology, and fashion, as his shirt shows. John Murphy is a director of municipal investor relations on PFM's Munite platform. Prior to joining Munite, John spent most of his career as a senior research analyst at Fidelity Investments, covering electric utilities, water sewer utilities, gas prepayments. He started his career trading at Fidelity and JP Morgan. Brit stock is up on the monitor behind us. Brit manages the debt program at the Dallas-Fort Worth International Airport, and fun fact, gave me a tour of the airport earlier this year, which was fabulous. Brit previously spent more than 10 years in municipal finance, including a stint at Bank of America. And Stephen Winterstein is founder and managing partner of SP Winterstein and Associates. The firm advises dealers and buy-side firms on data, technology, vendor engagement, and market structure. He has 35 years experience and previously worked as head of capital markets at Alpha Ledger Technologies and the head of munis at Market Access. So with that, we're going to kick off. Reminder again, I thought the questions were great coming in. There's another t-shirt on the line. And now that you've seen the quality of that, I'm expecting lots of great questions coming in, and it worked pretty well. Thank you for that. So if you do have questions as people go along, go ahead and send them in. I want to kick off first, though, with a general question. I want to ask the panel, we'll go around, about the challenges municipal advisors face with aging technology.
Oh boy, should I take that one
first?
Yeah,
you can jump in first. I feel like you're talking your book here.
After James came out with a major focal point of technology, I think it's pretty obvious here in today's times that a lot of folks are still relying on paper, fax machines, as I said earlier on. Listen, I mean, it's a tough call. I think the market has certain fundamentals that have been ingrained in folks for a very long time. But given our discussions, given our time actually talking with firms, we are starting to witness a material change in how firms want to manage their operations. Less headcount, more productivity, and to me, I think that's the most exciting aspect of the muni market is folks do want to see it modernize, hence this event.
Jump in there?
And it's pretty funny. In preparing for this and having conversations with some of our clients, and I run Munite, which is an aggregator of a lot of investor information that issuers provide for investors, that makes analyst jobs a lot easier. And it's free to analysts, issuers pay for it. So the information's free and available. I liken it to if I were to tell you that I have this device that you plug in, you put right next to your bed, and you get rid of your old alarm clock that wakes you up, and it's going to save you, and it'll gain you 15 extra minutes a day in your life. So every day going forward, you're going to get 15 minutes, and you'll find more time for that. Would you do it? And like everybody would be like, yes, well, I'd love an extra 15 minutes, unless your life's a hell, and you don't want 15 more minutes during every day. And that I can understand. But like getting folks in the muni market to change their ways, to make them more efficient, and make it easier for them to pull this information in and the data in so they can actually start doing the analysis and do the analysis as opposed to spending all the time gathering it. And that's what the Munite platform started to do. But there's so many other avenues where you can start pulling in all this information to make your lives a lot easier. And I think it's time in our market we really need to start. And I think we're there. And it's just, I had asked the question to Suzanne about, like, how often do you change vendors and the information you get? Because I know a lot of that is sticky. And if you just made a $5 million commitment to a firm for information, you're not willing to go change and do something else, which is really, it's an important part of it, that you're making commitments for technology that could change in 5 months, 5 years, or whenever. And you don't want to be stuck with something that's legacy and, maybe still useful to you, but there might be some other better widget out there.
Is it think it's money or what, or is it just culture, or what are the the obstacles at this point from adopting new technology?
Well, the culture is going to change because just look at the room. It's a lot younger than a lot of conferences that happen in the Muni world, right? So my cohort and my age group is dying off and we'll be out of this business soon. But so
Speak
it's
for yourself.
I think you get a T-shirt for that. So,
No question needed.
No, but that's part of it. I mean, you look at a lot of underwriting desks and they're finally starting to make the changes, but we're still using the same font on deal wire since 1978. I mean, it hasn't changed. The wire doesn't change. It looks the same. Yeah, technology behind it might have changed, but it comes out the same way. We deliver OSs the same way. How would things get delivered into our market the same way? There are ways to make this a lot more efficient, and accepting of technology because it's so fragmented in our market is something that we all need to focus on. And if you're on the buy side and you're at a large shop or a hedge fund or anywhere, you need to find that most efficient way of getting that information so you can start doing the analysis. Because as Abhishek said, if you have, and I had 500 credits or under that when I was at Fidelity, I covered all the water and sewer and all the power in the country. I needed that. I needed something that was going to make my job a lot easier to bring it all together so I can spend the half an hour to 45 minutes on a AA credit that I needed to for the 5 ratios to figure out what they were and see if anything's going to blow me up. That's my rant. I apologize.
Yeah, well-
I went over.
So, first of all the panelists up here, I'm the least qualified to be commenting on this, so I will try to keep my comments brief. And I'm also intimidated by the audience. You guys are all, way more informed than I am. So, and I'm not just being humble. I really am intimidated by this. That may be the first time you've ever heard that from me. But
Therapy's working good then.
Therapy's working okay. So when I left Market Access, I went to Alpha Ledger to start underwriting deals to record them on blockchain, and we did a couple of them. Actually, I did a couple of them, what I will say is that I was absolutely astonished that one of the deals that we actually underwrote, I had to fax in my bid. And I had never heard of that. Well, I hadn't heard of that since the days of thermal paper when it turned yellow. No one in this room will remember that. Murph, you might remember that. But I think it is a combination of culture. I think it's a combination of culture and the demographic, as you said. But I also think that we suffer, and I hope you all will agree with me, and this is an indictment on our entire slice of the industry, if you will, or our subculture. There is, in technology, there is a fake it till you make it ethos. And what we always see is these companies, and I've witnessed countless of them out there, where they promise that they can do something that's going to change your workflow, your day-to-day, improve, whether it's improve pricing, improve the speed with which you can execute, all manner of different things, and then they can't deliver on it. And I think we also, but I think in addition to the demographic and our suspect eye that we look at all of this stuff, I also think that the technology and the vendors of technology are as guilty in terms of the problem in promising things that they simply can't deliver.
I'm just going to say, though, having worked at Bloomberg,
Yeah.
we delivered everything. Come on.
Of course you did.
Does Brit
Let's
have
jump to
anything?
Brit.
Yeah,
Brit, if
Brit.
you're on the screen behind us.
Yeah, doing a Max Headroom impersonation, I guess. So, from my background, having been on the banking side and now on the issuer side, kind of adding to what, Matt said, there's still an awful lot of emails that go back and forth with a version of an OS, and it's hard to keep track of where you're at. And I think part of the problem is that it's a disjointed industry. you have so many different players that are doing the same thing, and there's not one centralized platform. And once we start making that leap to, a centralized platform that you can start having, to the benefit of sharing information rather than, sending little bits of data back and forth, I think you really would get to the point where, people would start saving time. But I'm not sure if it's culture. I think there's probably, as has been said, there's probably, a certain seasoned individuals that say, well, we've always done it this way, it'll work. And the people that are actually doing the work are the ones trying to figure out the shortcuts. And as Matt said, not throwing any more physical people resources at the problem. We're trying to figure out how to do it, smarter.
Do you think, Brit, as one of the bigger players in the market, are you investing more in technology, or do you make any requirements of firms you deal with to be at a certain level or meet certain standards that might kind of push this along?
Well, that's a very good question. So I've been at the airport now for 3 years, and we don't make any requirements of any of the firms as to what standard they're going to use. And I never really knew it from having been on the banking side. Something as simple as getting all of our orders after a transaction, and I go to put them into our own database, and then realizing that each and every firm has their own way of naming an investor in IPREO. So it's again, that's where the disjointed nature is that I can't just drop this data in and be done and be able to, reply to my team and say, hey, look, this was interesting. This investor gave us orders. So we're not, I'm trying to push us towards doing more, implementing more technology. But, right now, really on the issuer side, we kind of leave it up to the banks to, lead the way on that.
The last panel we had, there were a lot of questions that were coming in about AI. I asked about it, but I didn't even ask all the questions that came in. So given the fact that Matthew set the basic fax machines, I don't know about this, but can we talk a little bit about if there's are any of you using AI now? If not, are you thinking about it? How are you thinking about it? What's the discussions you're having?
Yeah, I mean, look, I think it's a fair point. Just to kick it off here, I have never, since entering this career, been to an event with so many Muni technologists in one room. And I think that tone is changing. To Steve's point about other technologies, yeah, the barrier to entry is high, but you mentioned artificial intelligence. I mean, it's amazing. Today on LinkedIn, I saw you can now take your phone and scan a bicycle and ask AI how to actually raise or lower the seat. So let's just break it down point by point. You have 12,000 or so issues that come to market every year. You have over 50,000 different issuers. You have all the documents that correspond to these particular issues. I feel like everyone in this room here could come up with a common denominator. This technology can comb those documents faster than any other analyst, a group of analysts. Steve's point, promising the world, it will happen. And I think that is going to be a very, very large inflection point into the market. So my message to everyone would be very simple. Yes, you should explore the technology, and yes, it still has to take time to actually become a part of our market, but you can't ignore it. And I think that's really the major point.
Just go a little further, though. Is there anything specific? So obviously it's going to be a big deal. Like, what do you see coming earlier, faster among the many things that could happen?
Answers. Instead of 4 of us combing through a document, you enter in a question. What was the average true interest cost for healthcare deals in the Northeast? And it'll spit out a response with every single deal itemized. Or who was our bond counsel on the majority of our deals back in 2019? Response.
But you are assuming that same information is in every one of those OSs or closing docs maybe not in the same format or not, but it's not. And sometimes closing docs and closing costs are included on an issuer's website and it's there, but sometimes it's not. And if it's not, then you're back to that. I've got to go search for it and find it to make that comparison.
Yeah.
So,
I mean, if you just take a look at the effort that the reference data folks have made in using natural language processing and so forth, it's complicated because, number one, you have to train the machine. And training the machine is difficult because you need people who can train the machine. And once you have the people to train the machine, you suffer things like turnover. You need someone experienced, not just in natural language processing and machine learning, but you actually need people who understand what an OS is and to be able to work through it and identify the peculiarities of different kinds of sectors and so on and so forth. And once you have those people, I mean, as a very practical matter, there are firms who have tried this, and by the way, I'm such an advocate for this, for the technology. So I sound like I'm a naysayer on technology, and I'm not at all. If anyone believes that this is happening, it is me. But I think that we have a tendency to oversimplify things by saying, here it is, we can do this. And I can tell you of one firm that recently got into the reference data business, where the goal was to use natural language processing and machine learning, which we put under the umbrella of AI. And what it took were a lot of QA people to work through it, and it took a lot of time. And the point in all of this is that the technology's there. But I'm not so sure we're ready. The market's ready for it, and we figured out how to ingest it, if that makes sense. As of yet.
Just to quickly chime in here, I mean, when I first started in this industry, I remember a trader told me, looked me in the face, and said, "Electronic trading will never happen in munis. It's impossible. No two muni bonds are the same." And look how that has evolved. So I think to Steve's point, yeah, most definitely, but the firms who adopt first will naturally progress at a much faster rate than the inevitable progression that we're seeing in this market. And I think that's really exciting. And I think overall, one other thing too, and curious, Brit, behind me, what you think is that's where AI excels. AI can take unorganized and unstructured data and simplify it at a very, very low latency.
Brett, what are your thoughts?
Yeah, Matt, Ted, I would say that I haven't really looked into what exactly AI can do for me. I have enough challenges at work to worry about, but I do believe that there are opportunities. I'll give an example. One of the biggest headaches that I have with preparing the OS is making sure that all the tables are correct, and anywhere where there's verbiage which points to data that's in a table, I could see putting something together to where it would automatically verify that for me. Outside of a transaction, just my day-to-day work, we have talked about how we can implement AI in our internal processes, such as if my boss asks me, what's the balance of our CP program? When does it the current outstanding tranches mature, or what's our days cash on hand based on last month's numbers? To be able to put something together at a website or something that's accessible that would automatically spit out the answers that might save me. It's not, as was mentioned, it's not going to take me more than 5 or 10 minutes to get to that. But if I could get the answer immediately to my boss, or they could do it themselves, that's where I think, I'm probably going to focus for the next year. And I think it would be interesting, to share examples at next year's conference to say, hey, these are some of the things we did.
It's a lot of faith there's going to be next year, right? I like that. I like
MuniTech
that.
is, I
It's here
mean,
to
listen,
stay.
technology will continue to point north.
Okay. If we, Brit, I want to keep going with you a little bit. Next thought was, what do you use now in terms of technology to manage offerings? And what are your pain points in that technology? Where do you see, maybe some gaps or some things people are adopting?
So at the airport myself, when I got there, it was still the whole basis of here's the folder, you name it, the series, and you drop all your files in. And those could be, regulatory documents that you need to retain for a certain period, or those could be working file documents. And so one of the things I've worked with our technology group is to just automatically build from something as simple as a SharePoint list, automatically build a bond transaction project page, which automatically has a checklist that on creation does its best to pinpoint the dates when everything is due, basing certain dates off of the pricing, certain dates off of the closing, and trying to just come up with a complete set of tasks that are required. So that's the starting point. I can say that, we're looking at moving our debt out of an Excel spreadsheet. As much as I love Excel, now being on the issuer side, there's a lot. I go into the debt profile a lot more often, and so something that's a little more robust with a little more flexibility will be helpful. So, it's been slow going. I think the airport itself is very entrepreneurial, and we have a lot of tools, at our fingertips. But unfortunately, the bond stuff is only a portion of my job function. So a lot of the technology goes to outside of that function.
Just to chime in real quickly, Brit, you mentioned about the pricing schedule, and for those who have interacted with new issue deals, it is still a piece of paper with 2 calendar dates on top of it with all the actual items that need to be complete in order to price the deal. Why can't that be electronic? Dates change. There's an FOMC meeting. Instead of having to send an email around and go back and forth, that is just one low-hanging example of where meeting people today can really, really result in placing a greater emphasis on helping the issuers, helping the firms, moving the market forward. Very basic example. Brit, not sure how many times you have to reschedule an event, but
Well,
I'm trying to look through this ficus plan here.
real quick, just to come up with one example, just getting sign off for any one document that we're working on. If you have 10 firms, be it bond counsel, disclosure counsel, underwriters, underwriters counsel, emails are flying back and forth. We sign off, we sign off, we sign off. And if you walk away and come back and you miss an email, so to be able to track that, having something as simple as I go in and I say I approve or I sign off, and once everybody signs off, then it sends one email to the entire group saying, hey, the OS is good to go, rather than me getting, or anybody participating in the deal getting 20 emails from people saying they're signed off.
John?
Yeah, living through this process, on a weekly basis, and deals that I've been involved with, there have been some distribution lists that I've been included on just because I was backing someone up and I made a comment on an OS, and it gets like, who's making this comment? Where's it coming from? Who's he? And I'm like, it's from my PFM address. So, and by the way, everything I'm talking about today is my own opinion. It's not of that of PFM's, just so I clear myself there. But you get to a point of like making that process a lot easier would make the primary process a lot easier, and getting to a point where if I'm a boss and I can understand what's at an FA firm and I can understand what everything is going on at my firm through using something like Munichain, it would be fantastic because then there's a much easier oversight and I don't have to go through 6 systems to find it out. You get to that point and then you get up to pricing and it's like even an older tech world than it comes to getting through this process. Then you go to the pricing side and do you use what benchmark are you using? PFM's going to a BVAL starting on October 1st on pricing of all of our clients' deals. We've arranged that. We've talked to folks, and it's been, something that's raised some eyebrows with some underwriters and with some clients. But just understanding that we feel it's a more transparent process and a better curve to go off of. I love Peter Franks at MMD, and he does a great job in the construct of what he's doing. But it's not as transparent, and we want to make sure that our clients are seeing everything and why they don't get surprised when it comes to pricing. So you get through all this document fluff and you're exhausted when you get there, and then you have to come to market and making sure you're in the market if you're pricing off the right curve or what the conditions are. It really makes for a harder process, and making the process easier, at least from the document side and timing wise, I think is really important, and something that I scratch my head and why we're not using it more and why our clients aren't using it more and other people aren't using it more, but I don't control that. And I asked a question at a bond buyer conference 2 weeks ago, and I asked why are issuers and why is the muni market so reticent for change? And I got the answer, well, there's so many issuers, there's 40,000 issuers, they all have the same standard, but nobody leads in our business. So we're trying to take a lead with going to BVAL. We're not, we're doing it for our own reasons and for our client reasons, but like getting other folks to lead to make the changes that are right and needed, I think is important.
Are you going to vote for change here? What are you thinking?
I'm always a vote for change. And I'm just reflecting on everybody's comments and my own. And I don't want to sound like a naysayer. I am completely in favor of change at an accelerating rate, and I think it's happening. I think Matt's absolutely right. Specifically, to Brit's point and to Matt's point, collaborative platforms like Munichain are absolutely essential in the underwriting process, and I think that's just a natural progression of things, and it's bound to gain a foothold. My comments were strictly in regard to automating the reading of OSs, which I think is complicated. And I think, Matt, you would agree with me, right? I mean, we've looked at in one of my previous seats, we looked at using one of the applications to try to read an OS, and it takes an enormous amount of time to train it to be effective and get it to a point where it's accurate. And I would also say, look, I have Chat GPT on my phone, and it's fun. But you know what? But here's the interesting thing. I'm not putting my capital at risk when I ask it a question, right? I'm not. I mean, I say, hey, write me a pitch book on, for SP Winterstein and Associates, and it's amazing. It does a great job of doing that. It goes to my LinkedIn my LinkedIn page. It prints everything out, and I'm like, wow, I couldn't have done that. That's really cool, right? But if I'm relying on ChatGPT to say, okay, do this, and I'm going to commit, $500 million of capital based on what you tell me.
Yeah, it's risky. And
It's a different game.
I think that's the reason why that's across the board with ChatGPT.
Well, I'm not just talking about that, though. I'm talking about
yeah.
there's a commonality there, right?
Well, definitely. I mean, Steve, to your point, reading official statements are always different. It's somewhat like Mad Lib when you're a child, fill in the blank. A lot of it's regurgitated. However, my point is these technologies have a symbiotic relationship, and it's a function of augmenting your current processes at your firms to actually excel forward. But most definitely, it still has a lot of work to do.
So a couple of questions coming in. One for Brit, if I could. What's a compelling argument to get smaller, high-touch issuers to change the way they raise cash?
Can you repeat that for me?
Yep. what's a compelling argument to get smaller, high-touch issuers to change the way they raise cash?
I, when I don't even know that I would. I mean, there's so many different variables there to think about. Obviously, depending on the size, I know that at least a couple of years ago there was talk about coming up with a I don't want to say a Bitcoin type, but more of a collateralized type for munis, and obviously that hasn't gone anywhere. But the airport's a special place. The numbers we deal in, I'm more looking at the bigger picture. So unfortunately, Ted, I don't even know how I would answer that. I'd have to put more thought into that.
Let me jump to another one. The question was, do you think the FDTA will change how issuers come to market? And if so, how?
It'll definitely change how they deliver information to the market. How people choose to use that information and pull it together is the answer to it, right? Once we finally come up with the taxonomy for it and get through all that and everybody working together, then sure, it's going to make people's job a little bit more easier to compare apples and apples than it has been. Still doesn't really help you with other things and understanding credits and having that part of it. But if the information's easier and, shall I say, just more just more blah, and there it is, you can't nuance it, and that's what it is, then come up with your own metrics to nuance it, and this is the reason why you're investing.
Yeah.
So
I think taxonomy is absolutely the critical point. And of course, there are different advocate groups out there that have different views about it and so forth. But I think one thing is clear, in spending 15 years on an advisory board for an index family, I can tell you that sector mapping was absolutely critical. And it didn't matter. It didn't matter what you called something, as long as you called it the same thing every time. That's what's important. And in doing so, then I can map it to something, and I can rely on that mapping to be consistent and be accurate. And I think that the use of technology in deploying whatever form the end product looks like with the FDTA's mandate, I think that that people will have to, or issuers will have to be consistent. It will be very interesting to me to see who the onus falls upon, whether it's the dealers that need to make sure that the issuer, much like 15C212 is right now, that the dealers ensure that the issuers comply with whatever the terms of the FDTA are. But consistency is going to be the key to success in that. It's not really, taxonomy is important, but you can get very specific in the taxonomy, but once you get that specific, it has to be consistent and everybody has to agree on the methodology.
there are examples of it out there, right? In Texas, for example, that the numbers that get reported to the MAC are the same and in the same format and usable. So, there are things we can point to get there. Does Texas work for the whole market? Well, guess what? Texas is a big state, and it's got a lot of different type of issuers. So I think we just need to use some history and some things that are working to get there.
Another question. This is a bit more fundamental, but how will the recent exponential growth in private credit work its way into munis?
Yeah, I think it's a big fear of this market, right? If folks could raise capital at a lower rate with much less time and much less headache, they will. Who wouldn't?
Right. I actually think that the FDTA, Matt, to your point, is going to be an accelerant for direct lending in the marketplace. And I think there are certain challenges there. And by the way, I think the technology in direct lending is woefully inadequate right now. And I think I don't want to talk my own book here, but I think that that is an area that needs to be explored and developed. But we take the difficulties that we were talking about in bond issuance, in the new issue process with PDFs and emailing back and forth, raise that to the fourth power, and that's what you end up with in direct lending. There needs to be technology applied to that, but I only think that the FDTA is going to accelerate direct lending, and ultimately we're going to see folks figure out, and it's being done today, but not at the pace at which it should be done, and it's because it's an underdeveloped it's in its nascent stages. But the securitization of direct lending is probably at least on the horizon in terms of one of the results of borrowing at lower costs, circumventing all of the overhanging costs, and then allowing the banks to securitize that.
I guess I'd just say one thing. We at Munichain were very focused on creating an efficiency factor. So when an issuer, Brit, sorry, behind the plants here, looks at it as a COI, perhaps maybe there are some savings overall with leveraging technology. Now, fundamentally, it doesn't mean that humans are now no longer involved in this process, but that is where the market's heading.
Jumping back to Brit, the question was, with these new information tools, how do you see people making better decisions on structure and pricing? Or how do you think structure and pricing might change as you have more access to information, in real time?
Again, I think it's all a question of, what is it that, how are you trying to structure your deal? I mean, at the airport ourselves, we've had some deals that, we're trying to accomplish a specific goal, and, the pricing is important no matter where it is. So I really don't believe that there's ever going to be, that we're going to be pricing and trying to structure only because there's a certain place where the pricing's better. I mean, we're pricing to figure out, what's the best solution. What are we trying to accomplish? Are we trying to, refund for savings? Are we trying to refund for structure? So, I think we're always looking, for our underwriters to, go out and get the best pricing that's in the market on that day.
Next question, a little bit out of the box. What will it take for an issuer to launch a full primary raise on the blockchain? Didn't see that coming, right? So yeah. Anybody?
I mean,
John's like,
forget it.
No, forget it.
I'll defer to Steve. He works at a blockchain company. By the way, I studied blockchain in college. I'm a big believer in it. It's kind of like oil and water in the muni market. It's very challenging because you need a general consensus of all of the market participants to actually have it work out. But I'd defer to Steve on the question.
Wow. I don't know.
That's a good
I
answer.
spent a year doing it, and I don't know.
That's a good answer, yeah.
If you have to explain what you're financing to your board or your city council or someone, and then you have to explain blockchain to them, it goes to another level of like who you're trying to educate on that process.
Yeah,
And I don't mean that in a bad way.
No. But there are so many questions. I mean, that's a great question, but it's 3,000 questions wrapped into one. It's like, okay, what's the value proposition of doing it on blockchain? That's a question.
I mean, just to chime in, like by raise of hands, how many people here have purchased a digital asset with regular fiat currency? Okay, so a fair amount. There is a utility behind it, but the question is, what's the net benefit?
Well, buying a digital asset is one thing. It's what is the value proposition in doing that, in issuing it on chain. Well, there could be the argument that you're going to monetize the data, right? Well, but if it's distributed ledger, it can't be by consensus, and it can't be permissionless, right? It has to be permissioned, and so you don't have consensus. I mean, you're asking a question. You're not asking the question, but the question is 15 questions all wrapped up into one, and the issues are extraordinarily complex, and to unpack what exactly the value proposition is I think it's complicated. I really do, and I think I understand the general premise of issuing debt on chain. When in discussing it with others, one of the things that I think you have to ask is, okay, if I'm distributing it, if it's a distributed ledger, every node on the ledger owns whatever you're putting out there, right? And I understand there are keys, there are private keys and public keys, but if you're distributing something like, for example, reference data, and it's owned by every node on the chain, how do you monetize it? Who do you sell it to? Because everybody owns it.
Yeah, no, we're probably out of time.
Yeah,
but
we're going to call it on
Yeah.
blockchain.
I'd just say one last thing is, when underwriting a
Sorry.
deal, right? I would just say, and obviously we'll talk about it at the happy hour. I hope everyone joins us on the 39th floor. But when you're pricing a deal, it's really hard to have a blockchain ledger say, hey, I realize that there's no interest in its maturity. We will take it down. So there is a human element.
So we're going to end it there. I want to say I love this conference because no conference has as many coffee breaks as this conference. So we're going to take a coffee break. Please be back in just 10 minutes, and we'll hit the last panel of the sell side. Let's thank the panelists.
I didn't get the book question.